guys, welcome back to the Capital Mindset Show. Today's going to be a little bit of an update on Facebook. So Facebook keeps crashing, right? We keep losing more and more money on Facebook stock, and I'm actually loving every bit of it. And so what I'm going to be discussing again is, has my strategy changed? And, spoiler, the answer is no, it hasn't. If that's what you came for, there you go. That's the information. All right. So I'm going to be actually talking also about the portfolio and some changes that I've made. So I saw that some of you were actually looking at the portfolio while I was making those changes. So those of you who are watching or were on the portfolio, you probably saw it in real time. So I did update it as of today, 2/16/2022. So it is up to date. I added more shares of Facebook. I already updated it. I just didn't want to do it later. I just did it right away. And then I also added a new column, which I'll show you guys here. Just so you guys know, the watch list part is not done yet. I still need to add, for example, some prices that would be interested in the company, but they're not definitive prices. So what I want to show is that I put a strategy if accumulating or selling. Okay, so if I'm selling or if I'm accumulating, what am I doing? What am I thinking? Right. And so I always like to create ranges for myself because I don't like to go all in on a stock. Very few instances. So for example, if I am accumulating right here and I say only on the nibbling, that means I'm only nibbling. I'm not making a buy price where I'm biting a ton of it. That means it's done. Right. That's already happened. It's already up to the size I kind of want it at. I'm just going to nibble and add. And I believe it's still at a value where I can justify adding, but not crazy adding. Okay. So and then also if I'm selling, you can see I have the different terminologies. I'm dumping, I'm selling, or I'm trimming. And then so there's some that I am trimming, right? Or maybe there's some that I am selling right now like crazy. And the one that I'm trimming, for example, is Brookfield Asset Management, which deserves its own video. I do love the company, by the way. I'm not going to sell the full position, but the one that I am going to be selling completely, and I actually need to remove this, is Honeywell. I'm going to be exiting my position Honeywell, taking my profits at some point in the future soon. And the one I'm interested in replacing it with is a stock that will have its own video. Okay, so that one is another industrial. That's all I'll tell you. Okay, because then we'll get to that in another video. All right, you guys can try to guess in the comments down below what it is, and I gave you a big hint. It's an industrial. That's all. No, yeah, that's all. And well, it actually might be replaced with two industrials. One is a big boy and one is a small boy. Okay. And yeah, that's all I'm going to tell you. All right. So that's the added information I've kind of added. So for example, you can look here in Facebook, and I was nibbling at sub 300, but then I started to bite, right? I started to buy more when it's between 227 and 167.83. So I'm going to be biting, which means I'm going to be buying larger and larger chunks of Facebook or Meta. I should be calling it Meta, not Facebook, at these prices. Okay. And then it would become a bigger position in the portfolio at sub 167.83. All right. So then if you take a look over here, if you guys have remembered my cost basis is actually rising, right? For Facebook or Meta. I should call it Meta. Fabio, it's Meta. So you guys remember in that video, you guys could go back and see my cost basis. It's rising because when I updated the new shares that I added, it's now rising in cost basis. And just so everyone knows, as long as this is here, as long as my positions are in the correct amounts, this actually updates in real time. Okay, so as the day goes on, these prices move, right? These ones right here, this price. The average cost won't move until I add new shares, okay? But the price moves, and that changes the allocation percentages, and that also changes the gain and loss. So I think the other day, one of these was negative. I think Boston Omaha was also negative. Now I'm in the positive, but just barely. This one is another one that I'm just accumulating, and I'm only accumulating. I'm just adding, boom, 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 just nibbling. But it's in the nibble section. So that means, new shares here, new shares there, new shares here, new shares there, right? Of course, I'm not actually going to be posting the days I do trades because I don't want to encourage that. I want actually to foster kind of everyone to think for themselves. This is just for transparency. I'm just throwing it out here. You don't have to pay me or anything for this. And yeah, so you guys can just take a look and stuff. One thing I wanted to cover, what was it that I wanted to cover with you guys? Yes. So I actually also posted an example of a sell strategy. So with ConocoPhillips, I would dump it if it went above $100. I would just dump it. I would just take my profits there and go. Right now, I am in the bite and trimming section. I put NA there, but I'm technically in the it's not the bite, but I called it that, the selling and trimming sections. That's where I am with ConocoPhillips. I've had my profits. I'm very content with what's happened with the position. This is only counting the common stock. I've held call options on ConocoPhillips as well. So I'm very content with that move. And I just want to take my profits and kind of add that to my cash pile. And then, again, I'm adding shares of certain things here and there, and other things I'm just holding. Again, if you look at Google's my largest position by far. It's been so for quite some time now. And I mean, I'm not afraid of selling positions at times. And, I've sold Amazon. I've trimmed it down. It used to be more than 2%. Now it's 2%. When I first made this public, this portfolio, it was already at 2%. And then, so, there's certain positions that I'm always contemplating about, selling. So for example, we have ConocoPhillips, Brookfield Asset Management, and Honeywell. Honeywell's actually on the chopping block. I will change that live on, so I am going to be selling and you see it changes automatically to red. I love that. It just automates it. Just simple, make it simple. All right. So Cirrus Logic, that is one I'm just also accumulating. That you see, that one's in the nibble only. So I'm just nibbling. It's not in the prices I like. I've actually been accidentally kind of trading this thing with a friend of mine for fun. So, I said this before, I don't like to trade, but there are some times when I have fun trading with a couple of my friends. And we actually, I should do a video on this, but we did actually trade a lot of these, not meme stocks, but stocks that got hyped. And then it's a good case study because we did sell, not at the top, but we did sell into a lot of the exuberance. So for those of you who know CCIV, which is Lucid, we bought that one in January of last year, 2021. And when the creator Meet Kevin started talking about, we just got lucky. We bought that thing at like 13 something, and then I started selling in pieces, and I didn't time it at the top when I think it almost hit $60. But I sold and sold and sold, and I think my final sell price was like 54 for the remainder of it, and then it kept going up, and then. But that's not the point. The point is, there's some positions that if you guys knew that I had at that time, would be pretty funny. But I do that for fun here and there with my friend. And we've been accidentally trading in and out of Cirrus Logic. It's been following this crazy pattern. It just goes up to like 190 something. And then we would be selling and it keeps following this pattern. But I always hold a core position of Cirrus Logic. When I mean core position, it is not a core position, but a core position of that position. And so I just add back here, and I added again when it was at 80 something dollars. But now I'm just kind of just adding here and there because I really like the last earnings. And I've been holding Cirrus Logic as a portfolio for quite a long time. And again, I've only traded like a small piece of the position for fun. Okay. But I've been holding it for quite some time. And you can see with my cost base is actually going to be rising now because I'm going to be probably buying some more tomorrow, and it's gonna make my cost basis look worse. Anyways, but that's not the point. Gazprom, I'm holding that one. We're seeing with all the stuff going on in Ukraine. I'm not too worried at all, really. Is there anything else I want to cover? Oh yeah, the watch list section. So watch list, and then I'm going to go back to Facebook and kind of give my thoughts on Facebook. Watch list is going to be updated. I'm going to have this column right here, which is my price interested. So that's like, if I'm not interested in this company right now, I will tell you, or I'll do it over time. So I hope you guys bear with me on that. But some of these companies I'm really interested in, like for example, I have Microsoft in there as an example, because that's a fantastic business. Of course I want Microsoft in my portfolio, but at what price? And then I'll think about that. And then I'll add that here. It's like when I'll start looking at it. CRM or Salesforce is another one. I really love the company, but I wanted at my price. Berkshire Hathaway, that's the GOAT. You can't blame the GOAT. Intel, like I said, I've kind of smacked on Intel a little bit. Seth Klarman is actually selling Intel, funnily enough. I made the video on when I sold Intel. I sold Intel at like 53, 52. And now it's sitting at 48. I could buy back my entire position and, make that fun little bit of money. But yeah, I mean, I want Intel to succeed. I really do. And I'm really excited for their new GPU line. I just didn't agree with the way management was kind of doing it. It kind of made me feel like they were caring too much about the stock price. I wanted them to maybe, slash that dividend, stop those silly buybacks, and focus on building out the fab. Sure, yeah, they're getting Mobileye, but who knows what they're really going to get for it. If Mobileye is actually a good asset, why would you want to get rid of it? Of course, yes, it could be an overvalued asset at the time, at the moment, but there's other things they could have done. There's other ways they could have raised capital. Okay, so but that's my opinion, and that's all it is. It's an opinion. But I am watching that. And then some of these you may or may not have heard, like for example, Coca-Cola and Pepsi. Come on, I want them in my portfolio just at the right price. I want those companies. United Health, talk about that one when I talk about insurance companies. That's the creme de la creme of insurance at the right price. I would love it. Apple, needs no introduction. I've talked about NCR Group. I never ended up pulling the trigger on NCR Group, by the way. I think I said that in the video. Now you guys have access to the portfolio, so you can even see when I do an update video on the portfolio, whether or not I did execute a position. Because sometimes I might be like, oh, I'm going to probably add something, and I'll use that language probably, and I end up not. So this is an example. I haven't added NCR yet. AMD, same thing as other companies in here, as ASML, NVIDIA. I want all those companies, but at the right price. L3Harris is one I almost wanted to execute. And Huntington Ingalls, however, now that one was one I'm really interested in. I'll say that, but that deserves its own video. And yeah, of course, this is not actually complete. I'm going to be adding my full watch list, because I have my full watch list scattered across different accounts, and I'll add them all over time. And then again, even longer time, I'll add the price I'm interested in. But that's basically it. All right, going over to Facebook stock. So Facebook, yeah, it's getting clobbered. I'm really liking this. I want it to get to the price that I signified in the sheet. If it gets below 167, I'm a huge buyer of this company. Right now, if it goes down to that price, I won't even feel it tomorrow. It'll just be like a fraction move in my portfolio. But I want Meta to get to that level, because I do think we're getting to overreaction. But I want the price to be just right for me. And if it doesn't get there, I'm completely fine with that. That's not how I invest. My personal style is kind of just patience. I just chill. And then taking a look back at the model, so we can remember or remind ourselves about this. We're looking at a growth rate of about 11% that I can assume if I get it at those prices. I already had it pre-filled, by the way, so I wouldn't waste you guys' time in exploring the prices. So I think that's very, very, very fair. I think, and I'm being a little bit aggressive with this, because I think as they're going to ramp up the buybacks probably, but let's actually remove that just for conservatism. So even then, I think 13 to 15% growth for this company for the next 10 years is fairly that's fine. All right, that's fine. I think that's doable from this business. Of course, I'm getting it at a huge discount, so I can be wrong, and I gave myself a lot of wiggle room because of the huge discount rate. So I'm fine with those assumptions. Okay. Of course, the model is saying with these assumptions, it's like, oh, it's very improbable. That's what this negative 13% is implying, along with the bankruptcy risk and all that stuff, mumbo jumbo. So I think the cash flows are a little bit misleading at the moment. They look a lot lower. You can see at the PE is 15, but the price free cash flow is nearly 30. So, but the cash flows are misleading because they're doing the same thing as I did in the Amazon analysis video. And it's a big mistake that if you don't take into account the cash necessary for running the business and the cash they're using to reinvest. Very important to consider those two. Okay. They're outside of the dilution phase. So I don't actually think they need to dilute anymore versus buyback shares. They're going to be probably doing that plenty. Okay. And that's basically it. I'm kind of just hoping and praying that Facebook gets down to the 162 price and below. If they don't, they're still in my bite range. So I'm still going to be accumulating. I'm accumulating weekly in terms of my bite sizes. But I'm spreading it out daily. So I'm buying here and there, hoping that's a red day tomorrow, buy more. And so I've already updated the amount of shares that is there. So when you go on there, the new amount of shares is the most current up to date. And as I say, every time I update it, I will put up here and I will change the date. If the date is not changed, it has not been updated. Okay, right here. Oh, I'm not even sharing my screen. That is a fail. Right up here. If it's updated to the date you're looking at it, it's been updated. Okay. So again, that's pretty much it. And if you guys enjoyed this video, go ahead and feel free to leave a like. If you guys want more content like this is more of just an announcement / review or revisiting Facebook and some of my portfolio or my positions in my portfolio. Okay. And kind of go over my strategy and showing off this new little column where you guys can check that out. All right. On that note, guys, I hope you guys have a great one. I'll see you guys on the next video. Bye.